If I asked you how much money exists in America, you'd probably think about all the bills and coins floating around, right? Wrong. Less than 10% of all money exists as physical cash. The rest is just numbers on a screen, digital entries in computer systems, and that should fundamentally change how you think about money, banking, and your own financial security. Here's what I mean. Check your bank account right now. You see a number, let's say $5,000. You think that means there's 5,000 actual dollars somewhere with your name on them? There isn't. That number is just a digital record, a promise from the bank that if you want cash, they'll give it to you. But if everyone with a digital balance tried to get physical cash at the same time, the whole system would collapse in about 15 minutes because the cash doesn't actually exist. Most money today is created digitally through loans. When a bank approves your mortgage, they don't count out $300,000 in bills and hand them to the seller. They type numbers into a computer and boom, digital dollars appear in an account. That's it. No printing press, no vault, just keystrokes. This digital money moves from account to account, bank to bank, never touching paper, and most of it will never become physical currency. Ever. Think about your last paycheck. Your employer didn't hand you a stack of cash. They sent digital instructions to their bank, which sent digital instructions to your bank, and a number appeared in your account. You used your debit card to buy groceries, more digital signals moving numbers between accounts. You paid your electric bill online, digital transfer. Most people go weeks or months without touching actual physical money because we're living in a digital money system. Now here's why this matters to you. Digital money is easier to create, easier to track, and easier to control than physical cash. The Federal Reserve can add billions to the money supply without printing a single bill. They just credit accounts digitally. Governments can track every digital transaction you make. And if they wanted to, they could shut off your access to digital money with a few clicks. No physical cash means no financial privacy and no backup plan. This is also why inflation happens so easily now. Creating digital money is essentially free and instant. There's no cost to print bills, no trucks to transport them, no physical constraints at all. Want to add $1 trillion to the money supply? Just update some databases. Done. The speed and ease of digital money creation means the money supply can explode way faster than the actual economy grows. And that's how you get inflation eating away your purchasing power. Here's my advice. Understand that most of your wealth exists as digital promises, not physical assets. Keep some actual cash on hand for emergencies, not everything in the bank. If the power grid goes down, if the banks freeze accounts, if the computer systems fail, your digital balance is worthless until the system comes back online. Cash still spends when the screens go dark. Also realize that digital money makes you visible to the system in ways physical cash never did. Every swipe, every transaction, every purchase is tracked and recorded. There's no privacy in digital dollars. That might not bother you now, but it's a reality you should understand. The world moved to digital money because it's convenient, efficient, and profitable for banks. But convenience always comes with trade-offs. You're trading privacy and independence for speed and ease. Just make sure you know what you're giving up, and keep enough physical backup that you're not completely dependent on the system working perfectly all the time. Because I promise you, it won't.